Bitcoin has lost approximately 20% of its value in the past 2 weeks. The price has been falling steadily after hitting a high of $69,000 in November of 2021. After a lesser increase in March, the Fed has lifted the interest rate to a range of 0.75% to 1%. This comes as a disappointment to many who were anticipating another shooting like the one in July 2021. This is the largest increase in interest rates in over 2 decades. But as for now, we know you're questioning if Bitcoin will rise or fall to zero. And for today's video here at Data Dash, we will be delving deeper into this matter, so make sure to watch till the end. But before we go on, make sure to hit the like, subscribe, and bell button to see more of our crypto updates for you. Now, we won't waste a minute of your time anymore, so let's begin. Now, to ease your mind, the Bitcoin system isn't completely decentralized. The majority of the cryptocurrency market is currently down. Moreover, the price of Ethereum has decreased by more than 20%. Nothing is perfect, even if we consider the stock market. As we've seen, the decline in the value of stocks like Netflix has been so severe that even high-profile investors like Bill Ackman have been forced to liquidate their holdings. At the time of this script, even Apple, the largest and most reliable tech corporation in the world, was down by more than 14%. Bitcoin's price has fallen by more than 20%, but that's not the whole story. It has dropped by over 50% from its all-time high of $69,000. When the price falls further, more and more traders and investors are likely to dump their holdings and cash out before it's too late. Will the price of Bitcoin keep dropping, or will it not? Do you think it will fail before the year is out? How did day traders blow their whole 2-year profit in a single week? Those are all great questions, and we'll get to the bottom of them all in just a moment. Now, Satoshi Nakamoto's original intention when he created Bitcoin in the aftermath of 2008 crash was to decentralize the financial system, which was centralized due to the fact that only a few large banks controlled the whole system. There wouldn't be a crisis if bankers weren't allowed to get away with so much greed. While that may be debatable, the concept behind the crypto is brilliant. The only catch is that governments are very interested in regulating the movement of money into and out of the country, as this is the only method to replenish government coffers. Because of this, it first gained traction in the underground economy, where illicit products were sold. But when mainstream interest grew in the cryptocurrency in 2015 and 2016, its value skyrocketed. Bitcoin's price increased by over 2,000%, from under $1,000 in early 2017 to nearly $20,000 by the end of the year before it plummeted. That's when Bitcoin first began to attract international attention, and shortly after, numerous other digital currencies appeared. At the same time, though, Bitcoin was evolving from a money into its own category of investment. Bitcoin is no longer a medium of exchange. Rather, it is a digital asset similar to gold in that its value fluctuates, and its purchasers often do not intend to use it as money, but rather to store wealth or make a profit through trading. Actually, currently there are USDT or dollar pledged cryptocurrencies, which individuals can use as currency. The only question is, how are they different from using actual dollars? Binance and Coinbase, two of the largest cryptocurrency exchanges, are increasingly subject to oversight as time goes on. That begs the question though, how is crypto different from more conventional financial institutions? The only real change is the increased speed with which money may be transferred, but the fact that banks still hold so much sway over the system undermines the fundamental purpose of crypto. It's not inherently a bad thing to have banks manage much of our currency, since most individuals aren't great with money. The widespread prevalence of crypto related frauds can be attributed to the general public's lack of understanding of the underlying technology. When the Squid Game currency was at its height, its creators earned millions. Individuals invested their life money in an untraceable asset about which they knew very little. Nonetheless, they viewed this as a chance to make the millions they had always desired. As it turned out, there was nothing at the end of the tunnel except yet another con. When compared to the amount that will be stolen in 2021, that is chump change. Chain Analysis predicts that by 2021, fraudsters will have stolen a record $14 billion worth of cryptocurrencies, a trend that can be attributed in large part to the proliferation of decentralized finance system. Just consider that for a second. 14 billion bucks. You can now discover the true profit centers in the cryptocurrency industry. We anticipate much criticism for expressing this, but whether you agree with it or not, it occurred. The vast majority of that money was likely stolen through a rug pull, a recently created but rapidly growing scam in which con artists create fake but convincing cryptocurrency ventures to deceive investors into sending them their money. While following these folks is no laughing matter, the cops won't be of any assistance to you. Keep in mind that BitConnect case, in which the perpetrators stole over $1 billion and are still at large. Financial institutions are necessary to manage the market and avoid such scams, despite the fact that they may occasionally abuse their authority. Considering how much money has been made in the last 2 years, $14 billion seems like peanuts. From a low of roughly $10,000, Bitcoin's price has risen to almost $69,500, adding up to a staggeringly large sum of money, hundreds of billions of dollars. But since the Fed increased rates by 0.25%, the boom is finished, and its return is quite improbable in the near future. It's only 5%. There will always be good times and bad times. The era of easy credit is over, and the subsequent years will be testing. It's great news for the market as a whole, not just the crypto space. Take, for example, PayPal and other IT stocks. When compared to its level prior to March of 2020's crash, it has fallen by 40%, losing not only of its gains during the pandemic. Since its high point, the stock price has dropped by 75%. Volatile assets are hit most by a Fed rate hike because savers are more likely to move their money elsewhere. As a result, headlines like "Day Trader Army loses all the money it made in the meme stock age" can be found. That's not only true of equities, but of cryptocurrencies as well. The value of Dogecoin, the cryptocurrency most associated with the Doge meme, has fallen by more than 82%. Will the market continue its downward trend? The answer is yes, so long as investors continue to liquidate their holdings. We understand how distressing it is to watch your investments fall apart. For example, Coinbase co-founder Brian Armstrong saw his wealth drop from almost $13 billion to as low as $2 billion. The site expressed dismay at hearing that some suggested it to file for bankruptcy, with Coinbase warning that in such a scenario, customers could lose all cryptocurrency held in their accounts. The result of this is a worsening crisis. On the other hand, if you have other thoughts in mind for Bitcoin's future, then go ahead and share to us what you think in the comment section below. This is Data Dash, and if you enjoyed watching this video, please don't hesitate to give this video a thumbs up, and might as well Hit the subscribe and bell button to stay ahead for more of our upcoming crypto news and tips for you. Thanks again for watching, and we'll see you soon.